Okay. Clear now, everyone? I don't know why this name is Minakshi again and again. Okay. So, yesterday we we were doing this question number 13, and within question number 13, we had completed point number 2. Right. We had completed point number 2. Correct? Point number 2 we had completed. So now we will enter into point number 3. Everyone please. Point 3. I think point 3 is not a point that they are asking. Just see. Point 3 is simply a data. Correct? And now we have to go to point number 4. Everyone very carefully read point 4. This is the most important point of this question, because of which it is in this particular module. So point number 3, they are asking how many nifty contracts he would have to sell if he desires to hedge his portfolio until June. Wait, until June means, do you realize May futures, don't look at them now. We are talking only about June futures. They are asking, he wants to hedge his whole portfolio. Okay, he wants to hedge his whole portfolio. Ready, everyone? Anyone remembers the formula of number of contracts to sell or buy? Value of asset or portfolio upon value of one futures contract, the whole into beta. Everybody clear? The whole into beta. Everyone remembers the whole into beta? So let's start point number 4. Write down point number 4. Calculation of number of Nifty futures contracts to sell. Calculation of number of Nifty futures contracts to sell. Just so that you come back in groove, tell me, why are you selling futures contracts? Sell? Why not buy? Answer is like this, sir. We are having long position in the spot market. We are holding a portfolio. So our risk lies in future selling. You remember that explanation, no? Because my risk lies in future selling, that is why I have to sell futures. Everybody clear? That's the simple explanation, okay? Alright. Understood now what I said just now? Okay. So, point number A. If we want to hedge 100%, what are they saying? If we want to hedge total portfolio, if we want to hedge total portfolio, if we want to hedge total portfolio, next line, number of contracts, write with me only, is VA by VF into beta. VA by VF into beta, beta P you can write, okay, beta of the portfolio. VA by VF into beta P. Okay, search the question or search your solution, I might say, and tell me how much is VA. Come on. Very good, very good. 9,94,450. 9,94,450. Okay, search the question and tell me what is the value of one futures contract. Come on. 8850. Error. It will be 8850 multiplied by 25. Everybody clear? No, we have to calculate in rupees. Hello. So 8850 into 25. Okay, 8850. Okay, just 1 minute. 8850 into 25. The whole into beta. Beta is how much? We have calculated yesterday, no? 1.102. 1.102 we got yesterday. Okay, please solve this. How to do it? 994,450 into 1.102 divide by 8850 divide by 25. You understood what to do? 2 times you divide that, now you'll get it. 4.9. 4.95 contracts. Can I say rounded off to 5 contracts? Everybody clear? 4.95 contracts rounded off to 5 contracts. 4.95 rounded off to 5. All clear? Everyone, can I go ahead please? Okay. Point number B is what? Point number B is, if we want to hedge 50% of our portfolio. Okay, let's start. So write down point number B. Point number B. If we want to hedge 50% of our portfolio. If we want to hedge 50% of our portfolio. If we want to hedge 50% of our portfolio. All done? Hello? What to do then? Number of contracts. Tell me, how should I proceed? I hope you realize this entire calculation, okay, is for hedging full portfolio. So then what to do? Into 50%. What else? Everybody clear na? Simple. Don't make the mistake of doing 5 into 50%. You know why? Because 5 is a rounded off figure. Everybody clear, no? I hope you're getting it. You do the whole calculation again. Of course, 4.95 and 5 are not very far away, but still in exam be little careful. Huh? You understood now? One thought can come in your head. Straight away take this number 5 and multiply by 50%. Rather do the whole thing. 2.48. 2.48. Now, I would like to tell you how ICAI has treated this. It's interesting. 2.48. Okay. There in AFM derivatives. Yes. So, you see this 4.953 we rounded to 5. Correct? So, 2.47 they are rounding it off to 3. Because you can see that because 2.47 is like 2.5. You're understanding, no? 2.5 rounded off to 3. Students, in one of the solutions, no, like that 2.4 or something had come. They rounded out. They have written there either 2 or 3. Like that, both are okay. They have said in one of the solutions. Everyone clear, no? So we will follow that rule of 0.5 and above. Everybody clear? Hello. Here it is 2.47 means it is 2.5. So we will rounding off to 3. No problem. But you could have argued for 2 also here. You getting it now? Both are okay. Alright. Next. Last point. Last point. If we want to hedge. How much percent? 120%. If we want to hedge 120% of our portfolio. If we want to hedge 120% of our portfolio. The last just 120 will happen. How much? 5.94 contracts, of course rounded off to 6 contracts. 6 contracts. Students, do you have the sense to understand? Wow, in point number C, as compared to point number A, we are hedging more. See, check. As compared to point A, we are hedging more in point C. This is nonsense explanation. Students, how can you hedge beyond 100%? 100% is the maximum you can hedge. Can I say to hedge, you are supposed to go for only 5 contracts. What is this 6 contracts? That means 1 contract you are taking for gambling. Everybody clear? There is no concept called as 120% hedging. Hello. Otherwise, I'll go for 200%. No, you're understanding 300. I'll do whatever I want. No. So, can I say for your spot market issue, 5 contracts were enough? Sixth contract is not going to hedge you more. Everybody clear, na? Sixth contract, can I say, will enter into, you're basically doing trading on futures. Everyone clear, na? You're doing gambling there. Okay. So, with that, we finish question number, which one this was? 13. Na? Now come to 10. Everyone come to question number 10. Okay. Question, students, question 10. What do you say? Frequently asked question. Question 10. Question 10. Frequently asked. Okay. Very, 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 very important. Read it carefully. Question number 10. Okay. Let's start. BSC index 5000. What is this? BSC index 5000. 5000 points is the spot as 0. Everybody clear? It's not the futures. Please be very careful. Index and index futures are two different things. Yash value of portfolio 10 lakh 10,000. Remember this story? I hope you realize this is also S0 and this is also S0. Hello? But I hope you realize this will have an F0. This will not be having F0. Everybody clear, no? This is basically your VA. I hope you're getting it. The VA that you want to hedge, correct? Risk-free interest rate is 9% per annum. This is R. Hey, yield. You remember yield? Y, hello, that formula you put now, minus Y you do. Hello, everyone remembers? Thank you. Beta of the portfolio is 1.5. Can I say this is beta P? Thank God they gave you this. Otherwise, full table we would have had to do like yesterday. Okay. We assume that a futures contract on BSE index with 4 months maturity is used to hedge the value of the portfolio over next 3 months. Think hard about this line. Tell me what are they trying to say? कहना क्या चाहते हो? Come on. Think about this line carefully. So yes. So I'll explain. Anyone else wants to say? You want to say? No. Anyone else wants to say? Yes. So that theoretical and actual, that's okay. I am asking you, what have you done here? Okay, what have you done here? They are asking you to assume what? So they are saying that, anyone else wants to say? Try no, please. Mulund. Yes, Smith, thank you. Very good. So students, very good. Lakshmi, yes. Krishna, yes. Yes, correct. So what happens is, we are Yash is saying, sir, my portfolio is there. I want to sell it off in 3 months. I tell him there is no portfolio futures. He says, I am ready to do cross hedging. I say, okay, go to Nifty futures there, or basically Sensex futures in this particular question. He says, sir, there is a problem. What is the problem? He says, Sensex futures are not available for 3 months period. They are available for 4 months period. I said, okay, no problem. You go for a 4 months futures contract and in 3 months you can get out. No, see, to get out, the only thing you need to do is take an opposite stand and get out. Everybody clear? Hello? That getting out, can I say he will do 1 month before the due date? Everyone following what I'm trying to say? Hello? Clear? Okay, now. Anybody wants me to explain anything again? 1 month before, you understood, no? Why? See, if he continues for one more month, he's gambling. I hope you're understanding. He had taken that futures contract to hedge his position in the spot. Now the spot position will end in 3 months. So can I say, what will he do in the futures? Now futures also he has to close out and get the gain or loss, whatever he gets there. I hope everyone is clear with this. Okay. Now, 1 month futures or I'm sorry, not 1 month. One futures contract is for delivery 50 times the index. Any idea what ICI is meaning by this 50 times? Very good. This is the multiplier. Everyone clear? This is the multiplier. Done. Based on the above information, calculate price of the futures contract. Okay. Price of futures contract. Now look at me. Can I say they're asking you to find F0. Now do you realize F0 is something that I cannot find, because F0 is something that comes by demand and supply. So do you understand what are they actually asking you is theoretical F0. Everybody clear? Theoretical F0. Just look at the data and tell me which case is this? Case where the underlying asset is okay, first of all, underlying asset is an index. You understand? The underlying asset is an index in which there is yield also given. So I hope you remember it will be S0 into E raised to R minus Y into N. Everybody clear? Or S0 into 1 plus R raised to N. 1 plus R minus Y. Now, if I take you to institute's material for this particular question, okay, wait, if you notice, catch, can you see this? This is the question, no? Question number 5, correct? Same question this is. Now, in question 5, I will show it to you. Can you see this formula? You're able to understand? Why 0.09 minus 0.06 R minus Y? So can you see that they have not mentioned anything about continuous compounding? So do you realize they are doing it on normal annual compounding? My language, you are understanding what I am trying to say? E raised to formula we will not use here. We will do the normal 1 plus R minus Y. Okay. Okay. So this is question number 10. Okay, question number 10. You can write with me if you want. Point number A or point number 1? What is it? A. Point number A. Theoretical F0 is equal to S0 bracket 1 plus R minus Y into, okay, raised to N. Okay. Now, what is S0? Which S0 will you take? His portfolio's value or the index? Index 5000. 5000 into 1 plus. Now, R can I say is 0.09. Y can I say is 0.06. Na? Okay, now you have to use some brain here. Think very hard. We are trying to find the valuation of this futures contract. Students, what month will you take? 3 or 4? 3 or 4? 4. Everybody clear? We will be taking 4. Why not 3? 3 is your private, you understand now, your lookout. It's nothing to do with the futures. Futures will say, Baba, I am a 4-month future. You have to value a 4-month future. I hope everybody is clear what I'm trying to say. Hello? Correct? No? Okay. So, into 4 by 12. Okay. So this is what? 5000 into 1 plus, what is this whole thing? 0.01 or 0.1? No, it can't. 0.01 na? Of course. Array, one is 9% and one is 6%. Difference is 3%. 3 into 4 by 12 is 1%, no? 0.1 if you do it becomes 10%. I hope everybody understands maths. Okay. So this is 5050. 5050 points. Can I say therefore value of one futures contract which we call as VF is 5050 points, and I hope you realize I'll multiply by 25. Getting it now? I'll multiply it by 25. How much? 50. 50, sorry. Okay, multiply by 50. Multiply by 50, and that comes to rupees 2,52,500. Rupees 2,52,500. Now, do you realize here we have to assume theoretical F0 equal to actual F0, because actual F0 data only is not given. I hope everyone is understanding. Here we have to assume theoretical F0 equal to actual F0. Students, tomorrow lecture we have, no? Tomorrow midway futures will end. Everybody clear? We will finish futures and then we will start with options. Okay. Actually, in futures, no, there is one more concept called as currency futures. Zoom people, or that part is pending, because in forex, no, there was when we studied forex for them, there were 4 sums which are connected with futures and forex mix, but I couldn't teach it to them because derivatives was not done. I will take a call tomorrow if I should do it for all of you also, because what is changing, you understand, no? Underlying asset will be currency. I've already taught you underlying asset is stock. I've already taught you underlying asset is index. Underlying asset is commodity. Like that, underlying asset is currency. So there will be dollar futures, pound futures, and so on. I'll just check the questions once. I will think about all of you once while traveling, that will you be able to take it? Because I know these people will be able to take it because currency chapter is done. You understand, no? If there is something which is, connected to that chapter and all, we will take a call there. Okay, don't worry. I did not, because for me this is the first time I'm teaching derivatives to a batch whose forex is not done. You understanding? So I have never thought about it. So I will think about it and then do. If I think we should do it, we will do currency futures. If no, we are going to options. Zoom people, I will do your currency futures later. Everyone clear? Okay. Done, everyone? Okay, because now what will happen if in that currency question some bid rate, ask rate, cross currency and IDQ and all that happens, no? Zoom people, I hope you know what will happen with them, correct? So it is better that we will not. But if there is no such kind of complication, then normal question, remove share, remove LNT, put dollar. You understand? Like that it will be happen. Okay. So here we have to assume theoretical F0 equal to actual F0. Everybody clear till here? This is point number A. Now comes the difficult point number B. They are asking you, what is the gain or loss on short position of futures if index turns out to be 4,500 in 3 months? Okay, now what are they trying to ask you? One by one, let's understand. Students, first of all, there is a lot of background story which they have skipped and directly asked the question. Please understand, and they are in their full right to do so, because they are assume that you will understand. See, first of all, do you realize that Yash has a long position in the spot market? What is Yash's risk? The risk of Yash lies in future selling. Therefore, to hedge himself, we will definitely sell the index futures. So, do you realize short position of futures, from where it came? You all understood short means he has taken a short position because he is having a long position in the spot market. Everyone clear till here? Now, when he sells index futures, can I say after some time when he gets out, he will buy those futures contract and he will close out. In that sell and buy, how much is the gain is what they are asking, which means, can I say, in point number B, At what price he will sell, this and all is irrelevant question. Everybody clear, no? S1 is not a part of our solution. Look at me. Only that F0 minus F1 calculation we have to do. Is the story clear? F0 minus F1 calculation we have to do. Okay? For that they are saying that when Yash closes out, the index has turned out to be 4,500. Can I say when we entered into the derivative market, I guess the index futures are trading at 5050. Hey, everybody clear till here? Hello. So students, at this point I want to gamble little bit. I am giving you 3 minutes. I'll keep quiet. Want to try? It's a frequently asked question. See, even if you get it wrong now, you still win. Because your understanding will be higher when I start explaining. And if you get right, it will be awesome. Okay, try. I want you to... Some of you might be thinking, sir, simple, no? 5050 minus 4500. Okay, no. I want to tell you, I'll give you a hint. I need total gain loss for Yash. That is the hint. Understood the question? I want total gain loss for Yash. Total. Underline the word total. Okay, start, think, chessboard. You can think little bit more about that 4500. Think. Okay, I got two answers. 1,65,000. साधापणे 1,65,000. Two answers. The you are trying now. Should I start or you want 1 minute more? Okay, I'm just telling you 1,65,000 is not the answer. Huh? Thank you. 1,10,000, not the answer. 25,000, not the answer. कितना? 27,500, not the answer. 27,500, one more person got. Okay, not the answer. Yeah. Somebody wants to try more? 2,52,500, not the answer. 1,25,000, not the answer. Anyone finds the right answer will get Dairy Milk Silk. Try. Some people I'll send it on as Zoom smiley. 1,10,000, no. 63,500, no. 161, 250. 161, 250, not the answer, but you're very close. Okay, I gave you a hint. 161, 250. Very close. But you could be very far also, God knows. I'll start. Nobody wants silk. Any other motivation? Any unfulfilled desires? 1,37,635, no. Okay, I'll give you a hint. The answer lies in the range of 1,60,000 somewhere only. 1,07,500, no. Okay, I'll start. Huh? Chalo. So, 1,65,000. No, no, 1,65,000. Somebody said at the start. Nah. Okay, 1,65,000. No. Okay, we'll do one thing. I think many people are saying 1,65,000. So what we will do is we will start from there and we'll see what error happened there. Everyone ready? Okay. So point, now don't write this because you know I'm writing wrong. Huh? Okay. So point number B. Gain on close out of futures position. Okay. Gain on close out of futures position. Okay. What is her name? Sahani. Sahana. Sahana, tell me, what is the first thing you did? Number of contracts. Very good. This is the first step to do the right thing. Hello, everyone clear? Number of contracts, I guess you have to think about it. Very nice. So till here we deserve eclair. Ready, everyone? So I am writing here number of contracts. Okay, number of contracts to sell will be, what is the formula? VA by VF into beta P. VA how much? 10 lakh? 10,000. No? 10 lakh 10,000. One futures contract I guess was 2 lakh 52,500. Am I right? Just check. And the beta P is 1 point. No, how much is the beta? 1.5 na? 1.5. Exact 6. So okay, no confusion about rounding off etc. We got 6 contracts. Everybody, point number 1 clear. I think majority, many of you must have not got this only. So this was the first step na, because he's not going for one contract na, he has to hedge the whole thing. Formula and all, you remember na everything? Okay, great. So 6 contracts set. 6 contracts he will sell. Okay. Then he sold them at F0. What next will he do on due date? Close out by taking an opposite stand, correct? So I'll say gain on close out, okay, will be, first we will have to track the original position. Can I say original position is sell at the rate, what was the futures price? 5050. I hope you realize this 250 to 500 are same thing. Hello, this is multiplied by 50 we have done now. And just right now, just to calculate gain loss, I'm doing it in points. So this, do you realize, is F0? Okay. Next, to close, what will he do? Sana, tell. To close, what will he do? Buy. Okay. Tell me at what rate did he buy? What are this? Acha, by the way. Hello, everything clear? When is he closing out? You know, na, 4th month or 3rd month? 3rd month. Tell me at what price is it? 4,500. It is given, na, last. See, everyone. Hello. So this is 4,500. This is, can I say F1? Okay. So you can clearly see that there is a gain. In fact, it is so clear that the question also told you there is going to be a gain. Can you see number B? They are not asking you what is the gain / loss. They are saying, na, 5050 dropped, Baba. You sold there, you are buying low. There is a gain. So can I say, therefore, total gain, okay, will be how many contracts? 6 contracts into, can I say 5050 points minus 4,500 points into a multiplier of 50. How much you're getting? Oh, the answer is 165. Hey, this is wrong. Very, very close. How did you get it? Yes. Okay. Now see what I'm saying. Student, this is, everyone understood till here? I think Mahalakshmi did the same thing, no? Okay. Now, Sandeep is saying F0 needs to change. Why? F0 is that only, no? 5050 given in the question only. We only did it, no? First point. Okay, ready? Alright. Now, the error lies in F1. The error lies in F1. Can someone find the error in F1? Students, by mistake, you took the spot price of the index. Look at what the question told in point number B. In point B, they did not say index futures dropped to 4,500. They said the index dropped to 4,500. I hope you understood there is a difference between both. Look at me. Index drop, but you will say, but sir, on due date, spot and futures price will merge, no, both will be same only. But the trick in the question was that the 3rd month was not the due date of the futures. I hope everybody is clear. There was still 1 month left. You had to calculate theoretical 1 month futures price. Everyone, are you understanding? Wait, just as today what was the spot? Okay, I'll draw a diagram and I'll show. See. Okay, this is 0, this is 3 months, this is 4 months. Okay, today the S0 is 5,000 and theoretical F0 for 4 months we got was 5050, which only we considered as actual. Everyone clear till here? Do you agree there is a gap between S and F? Why are these two not telling? Because sir, they will tell you. Hold on. Hello. Yeah, I'll again ask. Why is S and F not telling? Why is there a basis? Everyone understand basis. Why is there a basis here? Basis should eliminate. No, S and F should converge. They will converge. But they will converge, can I say, at the end of 4th month. Am I making sense? Hello? Till here clear? So now what did Yash do? Can I say he took a short position on this F0? Everybody clear? He took a short position here. So I will write, on this he has taken a sell. Correct? On this he has taken a sell. Now, can I say somewhere here he has to take a buy and get out? Come on everyone. He has to take a buy and get out. The question tricked you by telling you that the S has now touched 4,500. Arey Baba, but when he will get out, he will need the F price. No, not the S price. Everyone, are you all able to get it now? Hello? And now my question to you is, will this S and this F be same? No, because this future still has 1 month. Okay, let me see if you understand. Do you realize I will need to calculate a theoretical F0 here, which will be for 1 month future? Everyone, are you all getting it? Only 1 month is pending. Hello? But 1 month is pending. We assumed no months are pending. That is, where did we assume that? The fact that you took 4,500 as F1, no, this went wrong. Everybody clear? No, this is wrong. Getting clarity? So what will I do? I'll say calculation of theoretical 1 month F0 at end of 3rd month. I hope language is clear. At end of 3rd month. The formula will be same. It will be S0 into 1 plus R minus Y power N. Students, why am I using the word S0? Because now I'm standing there. Everybody clear? Now I'm standing at the end of 3rd month. For me, that 4,500 is S0. And from here, futures is only 1 month forward. Just as today, futures was 4 months forward. Now, can I say futures is only 1 month forward? Is the concept clear to all? Everyone following? So this will be 4,500 into 1 plus 0.09 minus 0.06 into 1 by 12. Is the story clear to all of you? Into 1 by 12. This will be, okay, this will be 4,500 into 1 plus. Now what is this? Please help. 0.09 minus 0.06 into 1 by 12. 0.0025, like this it is. Okay, and this will therefore come to 4,511.25. Everybody clear? 4,511.25 points. Students, this number that you have got now, this, do you realize 4511.25 is the actual answer here? Everybody clear? 4511.25. Slight difference is there. Achha, I want to ask you a question. Look at me. Look at me. Everyone, look at me. Important. Today the spot is 5,000. Futures is 5050. There is a 50 rupee gap. Now after 3 months, do you all understand that this is 4511.25? The gap is only 11.25 between spot and futures. In technical language, basis is, can I say, reducing. Hello? Can I say here the basis was 50. Here the basis is 11.25. Why? Why is the basis reducing? Because you remember the diagram, as you are approaching due date, the basis will get eliminated. Everyone clear? No, it will become 0 because timing value of money will become 0. Hey, everyone following till here? Okay. So at 4511.25, if I do the calculation, 4511.25, then what is your final gain loss? Please help. 161? 625. Something you said, okay. Okay. 161, 625. But hey, everyone understood, no? Excuse me. This is ICAI solution. ICAI. Achha, by the way, look at their note. They did this calculation, you remember? Now they are writing one note here. You can take it if you want. You take it in a sense, just read it if you want. think alternatively we can use the compounding exponential formula also. Um, you understand, we will do it only if they give you that e raised to, or they talk about continuous compounding, and otherwise the main answer is this only. Everybody clear? Okay. Now students, what did they do? One thing to tell you, sometimes these people call the beta as the hello. Beta p is there, no? Beta p, hello. Excuse me, hold on. This, not this, they call as the hedge ratio. These are number of contracts. It's okay. Now, do you realize that 6 contracts you are going for? Here they are referring to 6 contracts only as the hedge ratio. So, hedge is something that they use for anything. Point is, to hedge, you need to go for 6 contracts. Everybody clear? Students, look at how they are presenting. Index after 3 months turns out to be 4,500. Futures price will therefore be 1 month forward. Everyone clear? And therefore the gain will be 6 contracts into this into 50, 161, 625. What do you think? Story clear? Hello everyone. Hey Mulund, South India, understood everything? All clear? Very important question. Comes frequently. The numbers also don't change. 161, 625 is the answer. Everyone clear? Okay. So, uh, you can write my explanation here. It will be easier for you to grasp. Just 1 minute. Okay. Point number B. Okay, done. Everyone? Okay. So now in your notebooks, please give heading module number what now? 4. Please give heading module 4. Krishna, take this. Module 4 and give heading altering portfolio beta. Altering portfolio beta using index futures. Altering portfolio beta using index futures. Module 4 altering portfolio beta using index futures. Okay, students, now I would request you all to please keep your pens down. Entire theory I am writing here. Everyone ready? No? Explaining, writing, explain, writing. I'll give you the PDF. You'll write it later. Sums will start straight away. Everyone ready? No? Okay. You all are comfortable with this approach, na? Hello. Okay. Little writing part. If you can just help me with, no, I'll be able to share properly. Done. Okay. So, what is this concept all about? Now, I explain through the help of example. Zoom people, audio is clear? Hello, 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 hello. Okay. Now, as you know, we will bifurcate the page. So, there is spot market, there is derivatives market. Okay, spot and derivatives. Okay. So today is what date now? 28. So 28th of June. 28th of June. That is today. We will continue to hold the portfolio. Same story is continuing of every. So I'll write here. Is my voice breaking in between? Zoom people? Okay. You also? Okay. So, Yash holds a portfolio of shares. Value of the portfolio, which we call as value of asset, is, let's say, rupees 10 lakh. Same story I'm continuing, rupees 10 lakh. Everyone clear? Now I'm giving you added information which I did not give you last time. Beta P is 2 times. Last time you remember, after everything happened, then I told you beta is 2 times and all that. So beta of the portfolio is 2 times. You know it reacts 2 times to a change in index futures. Okay. Now, Yash has no intention as such to completely eliminate his risk, which is why he doesn't agree with module 3. I'll again repeat. In module 3, if you remember, there is a full lock on the portfolio. Do you remember? Eventually the answer comes to S0. You remember the whole explanation? You all wrote it down or didn't write? Hello? How many of you wrote down? Okay, thank you. Zoom people wrote down? Okay. Some people are just smiling. What does that mean? Shameless people. Huh? So, कमल तेरा बहुत बाकी है लगता है. वो लास्ट टाइम का भी बाकी रहेगा ना? हो गया पहले का सब खत्म? ओके ओके ठीक है. Okay, ready? So, students try writing on the same day, otherwise bouncer. Google. Googly. Ready? Now, so you are remembering yesterday's lecture. Many minutes ago we had done that, where eventually the final payoff comes to S0. But then we had that discussion also, that if final payoff has to be S0, then why is Yash doing? Instead of that, he should sell the portfolio. put the money in the bank, at least get something more, correct? No. Then I told you different reasons why, 13 reasons why, that Yash would do that. Now I am telling you one more thing. Listen carefully. Ready? Yash is saying, sir, I do not wish to completely eliminate beta. Oh, listen carefully. I do not wish to completely eliminate beta because, sir, in yesterday's lecture you eliminated my beta. Come on, think about it. Yesterday, can I say the same portfolio, sir, 2 times beta I had. But at the end of it, can I say my portfolio remains locked at 10 lakh. Market moves. My portfolio also moves, but eventually my final payoff comes to only 10 lakh rupees. Can I say my beta P, sir, you reduced to 0. Everybody, are you able to understand? The reaction only gone. You are understanding? Absolute no reaction. Like how sometimes final year students behave. You understand? Now, do you realize that he says, sir, I want some reaction. Because I'll say, Papa, why are you crazy? Because the reaction is risky. Because beta, if it is there, I am giving you hedge, no? If beta, I am removing beta indicator of risk, I am eliminating your risk. Why are you having problem with that? He's saying, sir, what if market increases tomorrow? You're understanding, no? If market goes up, then do you realize he's saying that I also want my portfolio to go up slightly. I'll feel so sad if it remains there only. Correct? Then my counter question is, what if it goes down? I hope everyone is clear. So do you realize he's stuck somewhere in the middle? He's saying that little bit, sir, let it be. You understand? No? Because even if it goes down, I'm okay with it. But sir, we will not keep 2 times. 2 times is too much, sir. I also agree. Let us keep 0.5 times at least. You're understanding what he's trying to say? Do you understand? He's saying, sir, let my beta of the portfolio be 0.5, which means if market goes up by 10%, let me at least enjoy 5%. Everybody, are you able to understand? If market goes down by 10%, okay, I will lose 5%. See, beta works both sides. I hope everybody is clear. But he is wanting to take that gamble. Can I say in module 4, little gambling tendency is there. Where he is saying that module 3 means complete lock. Module 4 is saying keep little bit open. Everyone clear? Little bit. Now can I say can be 0.5, can be 1, can be 1.5, 1.3, anything. In fact, if the gambling tendency increases, with the same method that I am going to teach you now for reducing, same thing you can use for increasing also. You can say, sir, I am pretty sure markets are going to go up. Let's say he saw exit polls of Indian government and he was convinced that market is going to go up. He said, sir, what 2 times and all, sir? I want 3 times. Give me more risk. Okay, whatever you want we can do. Everybody clear? No? What is the name of the concept? Concept name is not reducing beta. Concept name is altering beta. You can alter. Now the question is, sir, but how can you alter? Because beta P depends on the beta of Reliance that is holding, depends on the beta of Asian Paints is holding. That we cannot alter, no? Yes. Students, I hope you all realize that you cannot stop this 10 lakh from moving. It will move based on this beta only. But I want to ensure that the effect to Yash is 0.5. Everybody clear? Just like last question also, last story that we did. You remember Yash's portfolio had gone down to 8 lakh, if you remember yesterday's example. That he cannot stop. But can I say effectively for Yash, the portfolio remained at 10 lakh only because from futures he got 2 lakh rupee gain. Everyone clear? No? Hello? Didn't follow? Hello? Everyone clear? Okay. So that's what I'm saying. Effectively, you should get 0.5 times beta. Let's start. So I am writing here desired beta P is 0.5 times. Such a beta P, students, in this chapter we will call as beta asterisk. Everybody clear? So there is a beta and then there is a beta P asterisk, whatever. Okay, there is a beta P asterisk. Asterisk means the beta he wants. Can I say beta asterisk is the beta he doesn't want to eliminate? Think about it. Come on. Beta P asterisk is the beta that he doesn't want to eliminate. He wants to keep that. That is desired beta. Desired risk. Think about it. He wants to keep some risk. Okay. So now I come to futures. Students, there is Nifty. Achha, by the way, he will have to do cross hedging. There is no option here. Nifty August futures are trading at an F0. Yesterday we took 1000 points, I think. Just confirm those who have written this. 1000 points, na? 1000. What was the multiplier there? 20. Multiplier is 20. Can I say, now I'll directly write VF, can I say is 1000 points into 20, which is equal to rupees 20,000. This all you know, na? Hello. Okay. Hey, Yash has a long position in the spot market. His risk lies in future selling. He will, can I say number of contracts to sell only will come. Everybody clear, no? So I'm writing here, number of contracts to sell, okay, will be, what is the formula I gave you? VA upon VF into beta P. You remember this? Students, if this only I continue, then can I say Yash will have 0 beta? Come on everybody, are you all understanding? His complete beta will get eliminated, complete lock on the portfolio. This is yesterday's explanation. Today the explanation changes. This is the new formula. I will now explain to you the magic of this formula and how it works, the mathemagic of the formula. And then in the notes only I'll give you my derivation also, why it looks like this. I'll give you derivation of why the formula looks like this. Understood now everybody? Derivation need not write. Okay, I'll put it in black. Unnecessary time pass you should not do. Okay. Alright. So number of contracts to sell is this. So let's put numbers. Can I say value of the asset he is holding is 10 lakhs. Value of one futures contract, as you know, is 20,000. The beta of the portfolio is 2. The desired beta is 0.5. Okay, get me the answer please. 75 contracts. Very good. 75 contracts. All done. 75 contracts. Now students, on due date. Let's take it to due date. Okay. So I'll write here 28th of August. Okay. Due date. Now students, on due date, value of the portfolio, can I say, which we will call as S1, which we also refer to as value of the asset, has now dropped to 8 lakhs. Students, I'm taking the same story I took last time. Hello. And I hope you all remember that F1 will now become 900 points. Why am I saying 900 points? You remember that explanation last time? As F fell by 10%, can I say your portfolio fell by 20%? Na beta had to be 2 times. Hello, everybody clear? So I'll just remind you here. Futures dropped by 10%. VA dropped by 20%. Basically beta P is 2 times. This, can I say, you can't stop. Hello, everyone clear? Na? This is something beyond your control. Hello, you are able to understand what I'm saying? Na? Beta drop. Beta is 2 times that, you can't do anything about it. Okay. Now, so F1 is 900. If you want, I'll write here F has dropped by 10%, and here I'll write S has dropped by 20%. Is it clear, everyone? Okay. Now, what will Yash do? Yash, can I say, will have to close out the position. See, in spot market, he will sell the portfolio. In derivative market, he will close the futures. Everyone clear? So here I'll write sell portfolio okay, and receive, can I say 8 lakh cash? Here, can I say you'll have to close out futures position? How do you close out futures position? Okay, hold on. This is S1. I hope you remember. Okay, how do you close out futures position? I'll write here original position. Okay, original position is sell at the rate 1000 points, which we call as F0, to close buy at the rate 900, which is F1. Do you see a gain or do you see a loss? Gain, na? There is a proper gain here. Everyone clear? Okay. Okay. Students, one thing I just want to tell all of you. One commitment you please give. Eventually, when your exam nears, no, somewhere where I'm talking 2025, some of you 24 also? No, 25, then 26. I hope you study properly derivatives and all from me, so that you should not eventually go around running for crash courses and all. You're understanding some YouTube revision lecture, this, that. No, the note should be your revision. I am telling you, no video is as fast as notes. Notes is fastest. I have realized that I never thought about all this till Corona happened. Because when Corona happened, no, I saw students taking help of videos. Video concept was only not there before 2020. They were there, but we didn't used to even think about all of that. All this is never used to happen, Zoom and all. So that video is sometimes a curse. In a sense, you think it is there. Oh, we will take help of it. But you understand, just think practically. If today you don't have the time to watch a video, later also you will not have time. Today you don't have the motivation to watch a video, tomorrow also you will not have motivation to watch video. Only discipline will help. Nothing else. The 2x and all studies won't happen. You're getting it, no? How finals you study on 2x? 1.5, okay, I can tolerate. 2x not possible. It will all rush through. And therefore, I always urge students, notes make as strong as possible, because what can be achieved in reading 5 minutes, that half an hour video will go. You're understanding what I'm trying to say? Half an hour, 1 hour video, 5 minutes notes. See, game over. That is why I'm writing all this, because exams are, even though your exams would have been near, I would have still written all this, because derivatives is such a thing, I tend to forget. You understand? You will easily forget this. By the time you forget, in 3 months, 2 months, you will forget. The only thing you will know is, yes, I knew. You're getting it now, but it will take for you to teach it. Always remember, when you are sitting in lectures, sit as if you are sitting here, so that you can learn to teach to someone else. Even though there is nobody to learn from you, but still listen as if, oh, I have to teach it. Their memory becomes little more strong. You understand? You start thinking more about it. Otherwise, no, just sitting like this, this doesn't happen like that. Okay, all right. So that is why I'm doing all this, the big notes. Otherwise, I hope you realize this is the formula. Game over. Everyone clear? No, this is the formula. Take it and go ahead. But then all this we are doing so that you don't watch unnecessary, go around here and there YouTubing. And the worst part is, many people have different ways of expressing derivatives. Even within here also, different teachers will have different ways of explaining. All are right, but student is wrong if he sees 2233. You are understanding, no? He'll go crazy. Everyone will get the same answer only, but the pattern, the methodologies are all different. You getting it? Okay, especially derivatives, I'm saying. Derivatives and forex, both I'm saying. These two are, one teacher has started a particular chapter, no, just be with that teacher only. And notes also I'm giving you, na? Everyone clear? Stick to these notes, okay? All right. So, sell portfolio S1, close out futures. Okay, I think there is a gain, na? Here there is a gain. So I'll write here, calculation of final payoff, which is, can I say, a cash inflow, will be, I hope you understand, S1 plus F0 minus F1. At S1, do you realize you are selling the portfolio for 8 lakhs? At now listen. Students, I didn't have space here to calculate. I'm doing here only. How many contracts you had gone for 75? So there is 75 contracts into 1000 points is the sell, 900 points is the buy, and how many multiplier is 20, multiplier 20, 8 lakh plus, give me the full gain here, 1,50,000. Okay, and can you see the final payoff comes to 9,50,000? Till your story clear? Can someone tell me what is special about 9,50,000? What is special about 9,50,000? Okay, verification. See, do you realize Nifty futures, okay, have dropped by 10%? Do you agree? We wanted a reaction of 0.5 times. This was desired beta, no? Hello. You realize this was the desired beta. That is, that is percentage drop will be 10% into 0.5, which is 5%. I hope everybody is clear. Do you realize? Therefore, okay, hold on. I'll just say percentage drop in portfolio, or I will use the words percentage drop in overall portfolio will be 10 lakh minus 9.5 lakh upon 10 lakh into 100. This language you are understanding. Originally it was 10 lakh. Now it is final for years it is 9.5 lakh. Can I say there is 5%? Hello. So what I will do is, this is, hold on, desired reaction is 0.5 times, and I'll write here, is this clear more? Actual reaction. Everyone clear na? Actual reaction 5%. Hello, you got clarity? 5 and 5. Hello, all done now? Do you realize hedging is correct? Hedging in a sense, he did not want full hedging. Hello. So I'll just write here, therefore desired beta P achieved. Desired beta P achieved. All done. Any doubts? Sure. Okay. Now, what else do you want from me? Derivation. Why does the formula look like this? Please understand. Everyone ready? Okay. This is very interesting. It took me a lot of time to think about it. Why it looks like this? See, there is the spot and there is derivatives. Okay. Now, can I say in derivatives there is a value of a futures contract? Do you realize number of contracts into futures contract, can I say, is your position here? Come on everybody. And do you realize value of the asset is your position here? Do you agree everybody with me? Do you realize when this changes by X%, when this changes by X%, can I say this will change by X% into beta? I hope you are understanding. Take your time. Should I explain again or you understood? This is very simple and straightforward. Come on everyone. Mulund. Reaction. What? Yes, you understood what I did here? Okay. Now, do you get it that, okay, if this, hold on, before that, if you are having a long position in spot, do you understand you will have a short position in futures? Come on everyone. Sure, if you are having short position in spot, you will have long position in futures. Is it clear to all? Okay, so this is 1 and this is 1. This is 2 and this is 2. Everyone clear? Which means, okay, which means if this percentage is upwards, if this percentage is upwards. This percentage is also upwards only. They are going in the same direction. But do you realize in case 1, this will be loss. Hold on. In case 1, this will be loss. This will be gain. Think about it, please. This will be loss. This will be gain. In case 2, tell me, in case 2, this will be gain and this will be loss. Do you want me to make the notes more clear? Just one, hold on. How will you understand things? Come on. What are the 2 cases? Okay, hold on. We'll do one more thing. Okay. What is case 1? There is long position in the spot market. Can I say to hedge, you will take a short position in the futures. Correct? Everyone, are you all there? Students, do you now realize futures, if they go up, spot also reacts by going up. This will give you loss in futures. This will give you gain in spot. Is this now understood by you, or you want me to explain more? Why loss in futures? Why loss in futures? Because you have taken a short position. Short position in futures means you want it to go down. Hello. Going up, can I say, is loss making. But at same time, can I say in spot? Same thing in spot. Spot, you have a long position. If the prices go up, it is gain for you. Everybody clear till here? Okay. You tell me about case 2 now. Case 2 is, can I say, you are having a short position, short sell position in spot. To hedge, what will you do? You will take a long position in derivatives. Hello. Because if you are having a short position in spot, your future risk lies in future buying. No, hello, everyone clear? To hedge, you will buy futures, you will go long there. Short and long, you understand? No? Hello. You want me to write buy and sell? Clear? No? Okay. Now tell me. Okay. Now tell me, if futures go up, can I say there is a gain for you? Hello, you have taken a long position. If the spot goes up, oh my God, this is horrible for you because you have taken a short position. Share price goes up. Everyone clear now? Zoom people understanding now? Okay, now, what if futures drop and you have a short position? Tell me, you have a short position in futures. Futures drop. Tell me now, gain or loss? Gain, sure? Okay, there will be a gain. Are you just saying opposite words like that only? There loss, then here gain. No, no. Okay. If the spot drops, tell me, in your spot position, long position, gain or loss? Loss. All clear? Okay, now think here. If futures drop, okay, if futures drop, you are having long position in futures, gain or loss? Loss. Are you sure? Not telling me like that only opposite words? Hello, I can't enter your brain now, but I hope you are able to. You're telling me logically, you're thinking, no? Hello. If I have a short position in the spot and the spot price falls, can I say it is good news for us? Hello, everyone clear? It's a gain. Till here, everyone following? Done? Okay. Now, I'm writing something. For complete or perfect or 100% hedge, do you all understand that gain or loss in spot should be equal to loss? I am very purposely using opposite words. Loss/gain in futures. Okay, students, I don't know if you understand the marking I am doing. Hello, everyone, please check. You're getting it in one position there is loss, other position there is gain. That is offsetting. Everyone clear? Sandeep eventually lands at S0 only. No profit, no loss. Everyone clear till here? Okay. Now, for the above, okay, for the above, let number of contracts we go for be C. Everyone clear? Let it be C. Let the number of contracts we're going for be C. Everyone following? Students, can I say, therefore, now what is the loss or gain in futures? I'll continue writing in green only so that you understand. What is loss or gain in futures? Can I say it will be value of the futures contract you hold multiplied by the percentage change in futures contract multiplied by number of contracts. Come on, everybody, are you all understanding? Is it clear to you? Sure. Okay. If you want more clarity, I am writing here, let percentage delta, now delta can I say can either be rise or drop. Everyone clear? Let percentage delta in futures be X%. Do you understand now at least? Futures are changing by X%. They can either rise or they can drop. Look at the futures point. Futures can either rise or drop. That is called as delta. Everyone clear? Students, do you understand? VF into X%, can I say, is the gain or loss in futures on one contract. Into C, do you realize, will be the total gain or loss. Now a rise in futures is a gain or loss for you, or a drop in futures is a gain or loss for you. Can I say that depends on your position in the futures? Everyone understanding till here? Hello. Do you realize? Therefore, percentage delta, okay, percentage delta, that is rise or drop in spot will be X% into the beta. Come on, everybody, are you all understanding this? X% into beta times. Now, if there is a 2% drop and I am having a 3 times beta, my drop will be 6%. Everybody clear till here? Okay, so I will say here, okay, I'll say here, VA into X% into beta. Come on, now at least can you give me a good yes? Did you understand this? Look at the two greens, please. Look at the two greens. Hello. All sure? Clear? Okay. Students, now look at the magic. Everyone ready? If I want these two to equate, tell me what should be C? What should be C? Can I say it should be VF into X%? No, sorry. Okay, my bad. It should be VA into X% into beta divided by VF. Correct? It divided by VF into X%, no? Into X%. Students, where are we heading towards? I hope you're understanding. X and X will get cancelled. And what will be left is the number of contracts that will give you complete hedge will be VA upon VF into beta. Hey, this is module 3. Come on, everybody. This is mathematics, huh? Don't panic about all of this. You understood now the formula and all. I'm just giving you background about how the formula looks like this. Okay, VA upon VF into beta. Okay, now from this background, I will take you to module 4. Ready, everyone? From this background, I'll take you to module 4. Listen very carefully. Yeah? Ready? Now, in the above example, we completely Okay, we completely eliminated the risk, that is beta. Everyone, are you understanding? We completely destroyed it. Zero. Can I say beta P became zero? Done. Everyone following? Okay. Now, let's say desired beta P, okay, desired beta P is beta P asterisk. Everyone understands? This is the desired beta P. Do you all understand that the beta that you want to keep should not be a part of this calculation? Come on, everybody. It should not be, it should be eliminated from the calculation. Everyone following what I'm trying to say? Remove it out. I'll tell you what I mean by remove out. Okay, see. This I will copy. This I'll paste. Okay. Now, what is happening here? Index will move by this much percent. Futures. We will, okay, hold on. Index will move by this much percent. Our portfolio will react by this much. Everyone clear? Hello? If we go for these many contracts, can I say my beta will be eliminated? I will definitely get no movement eventually because I am matching the gain and the loss. Everybody clear? I am matching the loss and the gain. Got clarity? Now reverse calculation. Whatever loss gain will happen no here, I am using these contracts to take care of it. I hope everyone is understanding. If there is a loss here, these contracts, you give me gain. If there is a gain here, these contracts give me a loss. Everyone clear? It is completely eliminating. Now I am saying, sir, in this no, little bit gain loss na, I don't want these contracts to take care of. I hope everybody is listening. Little bit gain loss, let it be independent, sir. Don't let the contracts completely lock it. Hello? Students, do you understand? In that case, let's say VA into X percent into beta asterisk. Do you realize is the movement you don't want to hedge? Come on, everybody. It is the movement you don't want to hedge. You don't want contracts to hedge this much part. Are you all getting it? Students, therefore, what I will do is, I'll take this down and I will write here something. VA into X percent into beta asterisk is the beta we do not wish to hedge, okay, or eliminate using futures. Till here clear? So do you therefore realize that that portion should be removed from the LHS? Everyone clear now? You don't want it to get it out. Whatever is left only we will then hedge. No? Everyone clear? Getting clarity? You know what we are going towards. Look at the LHS now. Can I say in LHS it will be VA into X percent into beta minus, maths you're understanding, no? Beta asterisk. Come on, VA into X percent is common, is equal to C into VF into X percent. Now we have to find out what should be the number of contracts. Everybody clear? What should be the number of contracts? Can I say C should be equal to VA into X percent into, okay, beta minus beta asterisk, the whole divided by VF into X percent. Can I say X percent gets cancelled? And I hope you all have concluded properly. We have reached module number 4. Everybody clear? No? Hello? It will be VA by VF into, okay, beta minus beta asterisk. Zoom people clear? This is module number 4. Okay, module 4. Oh God. Samapt. End. Done. Those who didn't understand anything, this last formula by heart. Everyone will get same marks. What to do? Can we start? Sandeep, I hope clear now. Huh? Okay. So, Kusuma clear? Tanisha, Krishna, all done? Mahalakshmi, wherever you are. Raghunandan, okay. Okay. क्या हो गया? 120? 120 seconds break. Zoom people must be thinking which students these are. We never asked sir break in 3 hour lecture. In 2.5 hour also they are asking what to do now. हाँ हाँ क्या बोल रहे हैं? They are doing dummy ना? हाँ correct. Okay. So students, we will now start the questions. Why break and all? 2.5 hour na? It'd be very sinful to take breaks in 2.5 hours. I'll get blessings if I take you 2 minute break. You'll all pray for my good health. Okay, 2 minute break. 3 minutes. Pray nicely. Those who don't want break, no, can start reading question 14. Zoom people, if you want. Question 14. Okay, everyone, let's start. So, students, in your notebooks, look at the screen. There is this one page. There is this one page, and then there is this one page. Okay, the derivation you're not supposed to write only till beta p. Now, tell me how many sides will you leave? Two sides. We will leave two sides. Huh? Derivation don't write. No need to write because I'll tell you in your notebooks don't keep anything unnecessary. You will unnecessarily waste time in reading something unnecessary which your brains will not figure out whether they're necessary or not. I don't know whether you understood or not. Anyways, so which question I asked you to read now? Question number 14. Okay, please read question 14. Everyone, please look at the size. Oh my God. Question 14. Take your time. Read carefully, please. Shh, shh, shh. Question 14. As you are reading, no, I would request you all think it's a 8 mark question. Think this came in the exam. Think you are sitting in the exam. Think there is nobody around you. What will you do? 8 marks, 6 months. Come on. South India, it is raining there. Oh, raining cats and dogs here. Mumbai. Okay, please read question 14. Shh, shh. Okay, I think you people have the expertise to at least crack point one. Come on. Can we start doing everyone? Chalo, start. Question 14.1. Question 14.1. Okay, Coimbatore is drizzling. Okay, Chennai 35 degrees. Oh my God. Hubli. Chalo, start please. Question 14. Okay, Mysore. तुमको पता है ना उधर मैसूर में मैसूर मसाला नहीं मिलता है मालूम है? हम लोग जो इधर मैसूर मसाला बोलते हैं ना, वो उधर नहीं है. मैं इंक्वायरी किया वो लोग के साथ. इवन अपना चाइनीज भी वैसा है मालूम है ना. इंडियन चाइनीज और चाइनीज चाइनीज में बहुत फर्क है. चाइनीज चाइनीज तो तुम खा ही नहीं सकते. एनीथिंग दैट क्रॉल्स कैन बी कुक्ड ना वहाँ पे ऐसा. चलो प्लीज रीड क्वेश्चन नंबर 14 एंड ट्राई पॉइंट नंबर 1. क्वेश्चन 14 पॉइंट नंबर 1. What is the total value of your portfolio? This is correct? वेट्स हो गया वेट्स बोल फर्स्ट वाला 098 93 252 0.39 अच्छा 0.390 कर दूं हाँ this divided by this or yesterday I taught one shortcut remember 1 divided by this you should do 1 divided by this and then once you get that number then multiply by this and press equal to then just type this press equal to type equal to type equal to like that. Anyone got the answer? 0.8494. Let's see what ICI is getting. What is the start of this question? On April 1st. ये है क्या? This same question? Okay, 11th. ICI is getting 0.849. अपने को उसके आसपास we are getting it. हाँ ठीक है. So 0.849. Just check. Confirm. 0.849. So 0.849 times. All complete 0.849 times. Anybody needs half a minute? No. Okay. Now students, please come to the question again. Now we will go to point number 1 done. Point number 2. They're asking, theoretical value of Nifty futures for Feb. Wait, can I say today is Jan 1, which means it's 2 months forward. Hello, everybody clear? There are 2 months futures. Now, where is the information of Nifty and all? They are saying current value of Nifty. Hey, wait, this is Nifty. Okay, S0. And where is the R and all given? R is given here 10.5%. And I think there is no Y. Very good. There is no yield. So can we start doing it? Simple calculation. Let's start. So write down point number 2. Theoretical F0 in the bracket we can write 2 months is S0 into e raised to Rn. There are hints given in the question. Hello, to use e. Everyone clear? So this will be, now S0 is how much? 5,900 into e raised to R is how much? 10.5%, no? So 0.105. And can I say N is 2 months? So into 2 by 12. Everyone clear? So this is 5,900 into e raised to, what is there up? 0.0175. E raised to 0.0175. Oh, okay, my mistake. Students, I'm so sorry. This one line is there, no? Hello. Okay, understood what mistake we did. Chalo, thank God we saw. What mistake we did now? I'm so sorry. I forgot to tell you. The mistake we did is we did into 2 by 12, but they are asking you to do it using the days by 365. Everybody clear? Days by 365. But in that, no, institute has, we should have taken 59 days, na? 31 of Jan. Hello. 31 of Jan and 28 of Feb. ICAI has taken 58 days. Now there is no logic to that. You're understanding? What logic could be there? Sir, the above portfolio is at the end of Jan 1. Are you understanding the portfolio? But how will we understand in exam? So students, in one question, no institute has done this. This also okay or this also okay. Everybody clear? Both are okay to them. It is happening. So students, just telling you, we will do with 59 if you want. But I'll give you a note that in this question, ICA has taken 58. Everybody clear? Okay. Now, hold on. Don't write. Give me a minute. Everyone please. So, this part is now into 50. If I take 58 by 365, just tell me how much is this number. First of all, do this. How much is this number? 0.0167. 0.0167. Now the question, students, do you realize 0.0168? Okay. Now, in this question, no, they have not given that e raised to, correct? Something else only they have given. Now, I want you to just see what I'm asking you to. Please pay attention. See, they are saying cost of capital 10.5% per annum. Accordingly, continuous compounded rate of interest is the natural log of 1.105, 0.0998. February contract is 58 by 365. So F is equal to S0 into E raised to 0.0998 into 0.1589. Nobody knows what the hell they have done. Can you see? Natural log. Natural log is the not even the log we know. The log we know is log to the base 10. Natural log is log to the base E, which is log to the base 2.71828. And then cost of capital, now 10.5%. What did we do? We did 5,900 into E raised to 0.105 into this number should come, no? Hello, 0.1 into 58 by 365. Hello. Do you therefore realize that this solution straight away, this is matching. But can I say instead of 0.105, they took some other number only. God knows why. They realized the error and they put alternatively. Oh, thank God. Back home. Everybody clear, no? Hello. Everyone there? So this answer, I guess, we will accept and we'll go ahead. Everyone clear? Hello? Okay. Then what happened? Yeah, in this also right now that 59 error is there. It should have been 50. You understand? 58 error is there. It should have been 59. Students, you understand why I am showing you module again and again. I would have not told you also. You don't realized also. The reason is institute sometimes we don't have a law now. We don't have a section. Act 1961. We don't have. So ICEI is my only law. You're getting it now. So if they make some error now, I have to tell it to you, Baba, see that they have done this. So we will continue the way we know how to continue. Okay. So here can I say we will write 59 by 365. Tell me how much does this come to, but if I do 0.105 into 59 by 365, is it going to make much of a difference or the answer is same? 01 for 4 decimal, this is the answer, no? Hello. So tell me, have I taught you how to calculate e raised to 0.0167 on Calci? Hello. What will you take on Calci? Sana doubt? Tell me what will take on Kelsey. Tell me fast. It will be 2.71828. एक minute, that 0.0167 is changing here. You are not telling me only what is happening. 9, na? Okay, let's do it 9, na? Then okay, no problem. 9. Now tell me. 2.71828 is the E. Tell me what will you take on Kelsey? 2.71828. Then what to do? Root 12 times. Everyone please root 12 times. Minus 1 into power plus 1 and then into equal to 12 times. How much are you getting? 0170. To clear the Kelsey, 5900 into 1.017. Exact 6000. Point. Okay, 6000.16. Institute's answer is 5999.24. Give them the little benefit of doubt because I guess they have done 58 days now, 1 day less. Hello, everybody clear now? Little 1 rupee less is coming. So I'll just write down here. I'll put a star on this 59 and I will just write here and I will say ICAI has taken 58 days by assuming today is Jan 01 end. By assuming today is Jan 01 end. Therefore, their final answer what do you want to write is 1 rupee less. Okay, if it is not even 1 rupee, you understand? 599.8 something it is there. You clear, no? Okay, you copy this whole thing. Are you done with this? 6000.16. All done? Okay, chalo. So we have completed the discussion to this particular point. Let us now go to point number 3. Students, everyone please read point number 3. They are asking you how many number of contracts of Nifty futures we need to sell to get full hedge. Which module is this? Very good. For his portfolio, if all this data is given and Nifty futures is having a lot size of 200 units. Everybody clear? Nifty futures having a lot size of 200 units. Okay. Assume that futures are trading at their fair value. What does this line mean? That means whatever theoretical price for value we found, that only is actual value. Go ahead. Everyone clear? Students, number of contracts to sell. Don't think much about it. Formula I have given. No, take the formula and go ahead. What is the formula? VA upon VF into beta. That's it. VA upon VF into beta. Okay. So I'll now come here and I'll say point number 3. Let's do it together. Point number 3. Point number 3. Number of Nifty futures. Number of Nifty futures contracts to sell. Number of Nifty futures contracts to sell. VA by VF into beta. VA by VF into beta. VA na, we have no 188, 54, 860. 188, 54, 860. The whole divided by VF. Hey, one is 6000.16. And into what? So this is 56. You just check once more, it is 6000.56. Exact this into this you should do and tell me how much. No. I am saying forget it. Do the calculation. 5000 into 1.017. Tell me. 0.3. Okay. Average of everything. Okay. 6000.3. 6000.3. All done? Okay. So this is 6000.3. And now tell me one futures is having what multiplier, please? 200. Okay. 200. So tell me how many contracts? 188, 54, 860 divide by 6000.3 divide by 200. 13.339. 13.34. Sorry. Into beta. Beta is how much? 0.849. Okay. 0.849. 0.849. 13.33. Everyone got 13.33. 13.33. Okay, 13.34. Okay, 13.34 contracts. What is ICAI getting? 13. Look at this. I told you, no? See this. They also got this 13.3. And I told you last question how they are rounding off. Can you see this? Either they are rounding off to the earlier or the later. I will do 13 to keep uniformity. I hope you are understanding. 0.5 and above. Above. Below, then below. Everybody clear? So 13.3 contracts now rounded off to 13. So that 58, 59 day, can I say eventually didn't make any difference to the answer. I hope you are understanding. Our answer is 13 contracts. There are also 13 contracts. All done, 13 contracts. Students, point number 3 done. Now, क्या 4 क्या? मीत कुछ बोला? नहीं ना. Okay, point number 4. Everyone please read point number 4. Tell me which module is this? Understanding, they are saying what are the number of future contracts to trade if he desires to reduce beta to 0.6. Want to try this, please? Formula I've taught you now, beta minus beta asterisk. Now try applying, please, everybody. So point number 4. First we will write desired beta P is 0.6 and that we will name it as beta asterisk. Okay, that is beta asterisk. Beta asterisk. Number of Nifty futures contracts to sell will be VA by VF into beta minus beta asterisk. Yeah, so 188.54, 188.54, 860 divided by 6000.3 into 200 into 0.849 minus 0.6. Final answer, please. 3.92 contracts, obviously rounded off to 4 contracts. 4 contracts. 4 contracts. ICAI is getting 4. Please check everyone. 3.92, that is 4. Comfortable derivatives? Students, please understand we are doing the most complicated sums of futures. Now there is nothing more complicated left in future. Now options will start. Have we cracked futures properly, everyone? Okay, so 3.92 contracts, that is 4 contracts. Very good, we are done with this. So with that we complete question number, what was this? 14. 14 done, na? 15. Please read question number 15. Just 1 minute, 1 minute. Yeah, come to question 15. Please read. Everyone, please. Question number 15. Please read question 15. Already? Okay. Students, at least one thing you know how to do. First point, can you try please? Acha, by the way, as you read the question, you will find some area which you will not understand. Risk-free securities and all that. That is basically portfolio management. Okay, don't worry about it. Right now, please write point number 1 and complete point number 1, please. Point number 1. Are you done? 1.3? Okay, so I'm not doing it. Your answer is 1.3 times. All got it? 1.3 times. Very good. Now, uh, students, point number 2 and 3 is portfolio management. I'll do it tomorrow for you. But 4 and 5 is our zone. Everyone clear? Our in a sense as of today. So let's read. The investor thinks that the risk of the portfolio is very high. Look at me. Which risk? 1.3. He's saying, I don't want 1.3. I want to reduce it to 0.91. Everybody story clear? He is considering two alternative strategies. One is through portfolio management and one is through derivatives. Zoom people, you remember this portfolio thing where we used to bring in risk-free securities, their weights we used to adjust and reduce the portfolio beta. I'll explain this tomorrow in detail again to all of you because they are a party, no problem, I'll explain it. Now point 2 we will read. They are saying take appropriate position on futures. Hold on, look at me. Appropriate position means they are telling you, you decide buy or sell. Tell me what to do. Sell. You don't understand. Hello, why sell? You should only give one answer. Sir, I am right now long in the portfolio in spot. My risk lies in future selling. Therefore, I will sell futures. I've taught you simple. Don't complicate. This will go up, this will go down. Don't think all that. Hello. Simply say, Baba, my portfolio I am having, I'm long position. The portfolio risk lies in future selling. Oh, so in futures I will sell futures. In notes also, so many times I've written this. Everybody clear? Okay. So I am not going to read this like this. I will say sell. Okay, I'll say sell Nifty futures which are currently traded at 8125. Each Nifty point is worth 200. Student, this is not Nifty, huh? This is Nifty futures only. Hello. Game over, everything done. We have given. Students, I am waiting for you. Try point number 4 on your own right now. Point number 4. Acha, by the way, points 2 and 3 belong to this point 1. Are you all there? Hello. And 4 and 5 belong here. So, I will, students, do one thing. This 1, you write it as proper number 1. Don't write Roman 1. Write proper number 1. And now I am asking you to do proper number 4. Follow the same format we did in the last part of previous question. What is VA? Help me na. VA is how much? 5,000 only? Okay, okay. 5,000 lakhs. VF. VF is what into what? VF is no 8125 into 200, no? You took only 200. Hey Baba, 200 is multiplier. 8125 into 200, no? Hello, bas kya? 8125 into 200 into 1.3 minus 0.91. Everyone has done this only, no? Okay, answer 120. Exact answer 120 contracts. Please see, check. Hello, 120 contracts. All done? Anybody needs time? 120 contracts. Zoom people done? 120 contracts. Okay, last point. Point number 5. They are asking what will be the value of your portfolio beta for 2% rise in Nifty. Students, to explain all this, I will take at least 5-10 minutes. So what we will do is, you want to complete it? They are asking you, if there is a 2% rise in Nifty, okay, if there is a 2% rise in Nifty, what will happen to your portfolio beta? Are you all there? Okay, now see. Okay, you are doing. Okay. What is the point number 5? Okay. Everyone, just cooperate for some time. Ready? Okay. If Nifty futures, okay, do one thing. I'll explain. We'll writing part will do tomorrow. Okay, ready? I'll only explain. Okay. If Nifty futures rise by how much percent? 2%. Everybody clear? Nifty futures rise by 2%. Can you tell me F1 will be how much? Can I say it will be 8125 plus 2%? That will be 8125 plus 2% will be 8287.5. Everybody clear? Okay. Our portfolio has a beta of 1.3 times. Can I say this reality nobody can shake off? Everyone clear na? This beta is there. So can I say therefore increase in portfolio will be 2% into 1.3. This language you are understanding. Hello, X percent into beta. Hello, everybody clear na? Tell me how much this is. 2.6%. Everyone clear? Can I say therefore value of our asset at the end of the story, our asset original value is how much? 5,000 lakhs, no? 5,000 lakh, can I say will go up by 2.6%? Give me this number please. 5130 lakh. Everybody understanding till here? Now see what I am doing. Calculation of final payoff, that is cash inflow to me. Can I say I will take my portfolio and dispose it off in the spot market? In the derivative market, can I say I will close my futures position? I am writing here sell in spot. I am writing here close out futures. Now students, S1, can I say I will sell at 5130 lakh plus. Everyone clear now? 5130 lakh I will sell the S1. Last point now, last point. How do you close out futures position? How many contracts you have taken? 120. Can I say 120 contracts you have taken? Do you realize F1 has touched 8287.5? Hello, everybody clear? Sure? Okay. Tell me something, everyone. F1 is, can I say here, 8287.5. Do you understand what I'm writing here? What is your original position? Original position is, can I say, to sell at the rate 8,125. Hold on, 8,125. Just for your clarity, I will write here. Original position is sell at the rate F0. And can I say to close, we are buying at the rate F1. Everyone clear till here? Okay. Students, now one thing I have missed here. Can someone tell me what I have missed? Multiplier, no? Multiplier, hello. What is the multiplier? Hey, you remember, no? This, hello, don't forget multiplier, otherwise answer will come in points. Hello, everybody clear? Okay. So, this is 5130 lakh plus. I think there is a loss. Just check. Loss. How much loss? 19,000? Come on. How much? 39 lakh? Okay, there is a 39 lakh rupee loss. Okay, 39 lakh rupee loss. Can someone tell me why is there a loss? We sold here and the price went up. Futures went up. Can I say in spot you are enjoying? That is a gain in spot. Now spot is great. The futures are suffering a loss. So that comes to eventually how much, please? 5091 lakh. Everyone clear till here? Now I'll tell you magic show. Ready everyone? Magic. Students, you wanted a beta of how much? Come on, tell me please. You wanted beta of how much? 0.91 times, correct? Okay, see, everyone please pay attention. Desired beta is 0.91. Therefore, if Nifty futures changed by 2%, we wanted portfolio to change by how much percent? Okay, hold on. I can do like this. Wait, stop. There is one idea I've got. See, I want to now see what is my actual beta. Okay, what is my actual beta? Students, for actual beta, do you realize it will be percentage change in portfolio divided by percentage change in Nifty futures. I hope everyone is understanding the language. Hello? Did you understand? Meaning, if portfolio has changed, if the Nifty has changed by 2% and my portfolio has changed by 10%, can I say my beta is 5 times? Everyone clear? Okay, now by how much percentage has my portfolio actually changed? Do you realize my portfolio was worth 5,000 lakh, correct? It was worth 5,000 lakh. It has now grown to how much? 5,130 lakh. Am I understanding? No, sorry, it's not 5,130. It has grown to 5091, including everything. Everyone clear? So, I will do this. 5091 lakh minus 5,000 lakh divided by 5,000 lakh into 100. Give me this number, please. 1.82. Students, wait. Are you, before you go, don't go confused. Wait. What happened? Nifty fell or rose? Nifty went up by 2%. Correct? Look at me. Nifty went up by 2%. Correct? I want to know what is my overall reaction to this. Can I say that is my beta? Hello. Nifty went up by 2%. My portfolio went up by 1.82%. Is this clear? From 5,000 it actually went to 5130, but Nifty stand also we had taken. Total it went up to 5091. Can I say my portfolio has increased or reacted by 1.82%? Can I therefore say that for 2% change in Nifty, if I am reacting effectively by 1.82%, what is my actual reaction? Can you please tell me? 1.82 divided by 0.9? 1.82 divided by 2 is 0.91. Hey, hello, do you realize this is exactly what we desired? Hello, everyone clear? So this is the answer. Hello, if you check the question language in the end, this is the answer. They are asking you what is your portfolio beta. I am saying, Baba, my portfolio beta is 0.91. Hello, not following. Do you realize this what I have written? No, this is not a part of the solution. This what I wrote, 0.91, is just to open your eyes to help you understand, hey, my portfolio beta is 0.91, but can I say that the answer to point number 5 was there in the question itself? Come on, everybody. I said things only in a way that the beta will be 0.91. Now you're asking me what is my beta? Means they just wanted you to verify that 0.91 only is coming. No, everybody clear? Hello. This 0.5 we will write tomorrow. Today's lecture clear? 100%. Last point, tell me now. Sure you understood the last point? By the way, this last point that I have showed you is there in our notes also. In a sense, the notes I'll give you. There also I verified, no, that beta 2, from 2 I wanted to bring it down to 0.5. Sure, you're packing bags and saying yes. You're understanding what I'm saying now. Okay. Zoom people clear now? Chalo, thank you very much. I'll give you the notes. Thank you. Yes. Krishna, screenshot one. Screenshot two.